people to join us. But thank you all for coming to hear about the great news about PPP. I have a delightful, amazing client who's on this call who wrote me recently saying, is PPP a swear word yet? And I have to say, it really has been for a while. At first I was like, this is gonna make all the difference for everybody. This is gonna be the hugest, most important, wonderful thing. Everybody should apply. And then I went through a long period of regret there. And now I'm back to feeling like, okay, it's not a swear word anymore. I wish that we had gotten to the point where we are today without all of this interim stress. And I wish that some of the people who didn't get to take 100% advantage of everything that we now have available to us, you know, I wish that hadn't happened. But given where we are now, we're actually in a good place. You no longer have to be, you know, a professional accountant or lawyer to be able to calculate and apply for forgiveness. So that is really amazing news.
So Nancy, I do have to share one thing. On several of my phone transcriptions, you know, people would leave voice messages, and in several of my transcriptions, the PPP was transcribed as PEE, 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 and I'm like, yeah, pretty much.
I've had that happen. I would be talking into my phone and I'd say PPP, and it would do that, and I'd be like, yeah, pretty much. Which it's like the one I know for any other bookkeepers and accountants on this call, point of sale system is always abbreviated as POS, and some of them really are POS. Yeah. Yeah. Jen knows what I'm talking about. So yeah, PPP is no longer a curse word. So we've gotten so much good PPP news over the past 2 weeks, and as you may have noticed, I held off on my blog posts and webinars to go over the new applications because they were released without guidance. And I felt like I was giving everything to people piecemeal. But then once I saw that the AICPA had released their updated forgiveness spreadsheet, I was like, they attend the Treasury briefings, okay? And so AICPA, their weekly town halls have been more helpful than any of the other webinars that I've been going to, specifically because they're attending these briefings. They know what to expect is next. And they have said, hey, we're waiting on an FAQ. Hopefully it'll drop tonight. So we'll probably get some more so not official guidance that'll just clarify a few of the questions that we had in the most recent interim final rule, or I think it's the interim in between, underneath, around the side, final, sort of final, maybe next to final rule. But that information, once I saw that AICPA had released that, I was like, okay, they wouldn't be releasing that if they knew things were going to change again any minute. So now all we're waiting for is that newest Treasury FAQ, and really almost all of our questions have been answered. So I'm going to quickly go through the main things that have changed. Okay, this is big news, game changer news. One of them, non-owner employee compensation. Now, they haven't defined exactly what an owner employee is yet, but for most small businesses, that's not a difficult thing to figure out. But for non-owners, the compensation, if you elect the 24-week period, can be based on the full 24 weeks of pay, okay? So it still has that $100,000 cap. So the new number that you want to jot down is $46,154. No non-owner can get paid more than that dollar amount during, or can claim more than that dollar amount for forgiveness during the 24-week period. Secondly, and this is big, owner compensation limits have been increased. Now, before we were saying, is it going to be 8 weeks or is it going to be 24 weeks? It's neither. They actually did what they should have done in the very beginning. They made it 2.5 months. Now, that's what you used to apply. You look at 2019 total income or total compensation, depending on the situation. You divide it by 12, you multiply it by 2.5. That's how you got the number for your application in the first place. Well, now that is going to be the owner compensation limit if you elect the 24-week period. Okay, it's also capped at 100,000, but that means that instead of it being 15.385% of the 2019, it's 20.833%. So that is huge. Also, and this is, I keep saying this is game changing because it really is game changing. Borrowers may submit the application early. So as soon as you meet your requirements, you can submit that application. That has major, major ramifications. What it means is pretty much everybody wants to elect the 24-week period. Because if you elect the 24-week period, you all of a sudden get the bump up in what you can count as forgivable for your non-owner employee compensation. And you get a bump up, a different bump up, but still a bump up all the same, of what can be considered forgivable for your owner compensation, right? We've got the 24 weeks here, and we've got the 2.5 months of 2019 there. And before we were like, yeah, but that would mean that you have to keep your if you're trying to go for the FTE test, the regular test where you're comparing your FTEs against your comparison period. Well, now you have to keep that up over a whole 24 weeks, and a bunch of people, weren't sure that they could do that. Or you had your December 31st safe harbor for FTEs, and people were like, gosh, I don't even know if I'm going to be in business by then, and maybe that's not safe. So we're really nervous about that. But what this means is, let's say that you want the bump up in the non-owner employee and the owner compensation amounts, right? But you don't think you can meet the safe harbor for the 1231 FTEs, and you've already been able to keep your FTEs up for your entire forgiveness period, because originally that was how you planned this. A lot of us, your 8-week period is over. We planned accordingly, spent the money accordingly, and you met that FTE amount for that 8-week period. You can now say, oh, by the way, Star, could you please mute yourself? I think there's some background noise coming from over there. If everybody can mute themselves for background noise, that would be great. Thank you. And so when you take the bump up in each of these and you decide you're going to do the 24-week period, that doesn't mean you now have to wait for that 1231 safe harbor date. And it doesn't mean that you have to drag your FTE regular test out over the entire 24 weeks. You could do it in 8 weeks and 1 day. You could do it in 9 weeks. You could do it in 10 weeks. You could do it in 20. You get to pick however many. Now you sacrifice that 1231 safe harbor date, but that's fine. You don't need it. You can use the safe harbor date as if it were the day that you handed in your application, your forgiveness application. And if you're trying to hit that original FTE comparison rule, you can do it just for that period of time. Now, we've got another change that is so big that it even makes that kind of not important anymore, which is that FTE Safe Harbor #1, which is not the original Safe Harbor. You'd think they would have called that one #1 and this one #2, but this one's #1, which is the new one, saying that if your business activity was limited by a government mandate, then you can claim this check the box FTE Safe Harbor. And what that means now is that you don't even have to do any of the FTE calculations. This is the most beautiful noise, because although the change that they had made for on June 5th, when they did the Flexibility Act, the new rules were more generous, and we were very excited about those rules, but the arduous calculations that you were going to have to go through to calculate the forgiveness were all still there. This changes everything. It means that if at any point during your forgiveness period, your level of business activity was limited because of a government mandate, so this could be social distancing, this could be that you were only allowed to do takeout, it could be any number of things. It could be not being able to have employees come in because they weren't allowed to social distance in the back, right? I mean, there are lots of different situations. I'm going to say at least 70% of my clients are going to have this, possibly more, are going to have this. You'll be able to just check mark that saying Safe Harbor #1 happened, and you can skip all of the rest of the FTE stuff. So this is huge, really, really significant, really wonderful. And Safe Harbor number 2, which is the original Safe Harbor, if for whatever reason Safe Harbor number 1 doesn't apply to you, you at least get to use the date of the application becomes your new Safe Harbor date instead of 12/31. So there's nothing not great about all of this. Now you are going to have the occasional situation, and the example that I keep giving is I have some dog walkers. Their business activity was not limited by government mandate. They were allowed to function at 100%, but everybody was home on quarantine, and so they weren't able to. So that would be an example of where somebody doesn't hit that Safe Harbor number 1, but still would be able to benefit from electing 24 weeks and handing in their application early. So there are going to be some folks in that situation, and they're taken care of as well, which is great news. So what does this mean? This means that first off, any business owner with no employees should elect the 24-week forgiveness period, because their forgiveness amount for owner compensation is now the same dollar amount that they applied for. They're not going to have to worry about rent or mortgage interest or utilities. It's all going to be forgiven. And they're going to be able to use the easy application, which truly is easy. So I'm pretty excited about that. And I'm going to share my screen for a second here and show you what that application looks like, which is unfortunately sitting right underneath my Zoom. There it is. This easy application is actually easy, okay? We've got our loan number, our loan amount, our disbursement date. You elect the covered period, whether it was 18 or 24 weeks, you elect that just by typing or writing in what your covered period is going to be here. And you're literally just going to write in your payroll costs, mortgage interest, rent, utility, add it all together. Here's the PPP loan amount. And then you divide that by 60% to make sure you met the payroll requirement, which pretty much everybody is going to be able to do now. And boom, there's your forgiveness account amount. That's the entire thing. The rest of this is just you initialing saying, yeah, I didn't lie about anything. And then this is demographic information, which is optional. It truly is just a few lines long. So that's pretty fantastic news.
Nancy, for a Schedule C, is their payroll basically going to beat that 2.5 times the 2019 bottom line?
Exactly. Exactly. You take line 30 for Schedule C. It's the same exact rule as how you applied. So you take line 31 from the 2019 Schedule C, which hopefully by now has been finalized if it was in draft format. So you might be a few dollars off if something changed. You take line 31 from 2019, you divide it by 12, which is your average monthly income, and then you multiply that by 2.5. That is automatically forgiven as payroll, even though we know it's not really payroll. That's how it works. The second thing is that once you have spent the money consistent with the rules, go ahead and submit your forgiveness application. Now, banks aren't going to be able to collect these applications until at least mid-July. So where does that leave us if, let's say, you want to submit it today because you've met all the requirements, you're not allowed to? That's one of the things we're waiting for guidance on. Presumably, you'll just be able to put today's date in there. AICPA was quite clear that the intention is to be as liberal as possible with the interpretation of these rules, especially where FTEs are concerned. So I have some advice for accountants and bookkeepers who are on this call. Make a list of all of your clients who have the PPP. Make a list of all of those who fit this dog walking example that I just gave you, people who will not be able to use Safe Harbor to number 1, okay? And reach out to each one of those individually to work with them to determine what you want this new forgiveness date to be based on either Safe Harbor number 2 or the original FTE rule where you're comparing it to a prior period. Okay, those are the people you want to be addressing right now because they are still going to need some planning here. Anybody who has Safe Harbor number 1, that's the government mandate apply to them, Wait until after tax season. Like seriously, hold tight, everybody. Sit on your hands. It's fine. Plus, most of those people are going to be able to file that easy application on their own once their bank makes it available to them. Okay, so looks like it's kind of weird. I just missed Paul. Okay, I think we're back. I think that we are having a storm here, which is why that just happened. So the other thing for all accountants and bookkeepers and anybody who's running their own business, the payroll tax deferral is now available to all of us. I discussed this a couple weeks ago, and pretty much everybody wants to be using that. You know, there's no reason to be paying the employer social security portion of the payroll tax deferral when those amounts aren't going to be due until the end of 2021, half of it, and the end of 2022 for the other half of it. So make a list of all of your clients who aren't using that right now. I'm going to be writing up a blog post on how to look that up in Gusto for you, because they don't have a canned report. But pretty much anybody who has employees really wants to be taking advantage of that right now. Okay, so I want to tell you a little bit about what happened in the AICPA town hall this past Thursday. They said that I could go ahead and use some of their slides here to talk through this with you. First, I wanted to mention that, sorry, I'm just going backwards here. First, I wanted to mention that there is still money left, and the deadline is the 30th of June, and the only lender that I know of right now, I've gone through a few of these applications this week, that is consistently accepting applications and processing them quickly for all entity types is Cross River Bank, applying with them directly. And so go to the Cross River Bank website directly, fill out that application, do this fast, because you need a quick turnaround. The latest numbers are that the average loan size is $110,000, and 65.7% of the loans were below 50,000, 79.9% below 100,000, 86.1% below 150K. So finally, this whole thing has actually been reaching the people who need it most, the smallest of the small businesses. Only 0.6% were for 2 million and above. And there's 128 billion in funding that is still available. Also, they did announce that they are going to be releasing the names of folks who took these loans for above 150,000 only. It's very unusual for SBA not to release all of the names. They normally release all names. It's a Freedom of Information Act thing. They release all the names for all loans. But for PPP, they're going to keep it private and only release the aggregate information by zip code, industry, business type, things like that. But if it's for 150,000 and above, they're going to release specific information, and they're going to show you which one of these pots you fall into. So I think that's great that we got that that information. And the new guidance, we went through one thing that we didn't talk about. We talked about one of these a couple weeks ago, which is that the rules in terms of whether or not you've committed a felony, as long as it's a non-financial felony, those are actually a lot more generous right now. And so hopefully this will allow some folks in more disadvantaged communities in on some of the last of this money while it's there. So if you know anybody who didn't apply because of this, please take a look at those rules again. And then we already talked about the fact that you can turn in your application early. Jot these numbers down or take a screenshot here of what these caps are. If you elect 8 weeks, which really nobody should be doing at this point, there are very few situations where there would be an advantage to that. Your cap for owners would be $15,385, and for non-owners would be the same. Whereas if you elect 24 weeks, even if you turn it in early, turn it in after 9 weeks, you then get the cap of $28,833 for owners and $46,154 And I think that this little chart on the right-hand side is a nice little chart about whether health insurance or retirement gets included in those payroll numbers or not. And then we talked about the two different forms. Almost everybody's going to be able to fill out this EZ, so self-employed with no employees, or if you didn't reduce wages by more than 25% and didn't reduce your FTEs, or you didn't reduce the wages by 25% or more and you qualify for Safe Harbor number 1, right? These are ORs. And so it means that if any of these are ones that apply to you and your business or your clients' businesses, any one of those, you're going to be able to use that tiny little form that I just showed you, which is just fantastic. And then they have revised the regular form 3508, which is the form that we were using before. So let's go back to the notes here. There were a few things where you might actually want to look at the IFR itself, where the FTE exemptions are concerned. It was applied very liberally, and it provides that a borrower can apply for forgiveness prior to the end of the covered period, and that any salary and hourly wage reduction is applied to the entire covered period, and you're giving up the December 31st safe harbor in that situation and replacing it with the date of your forgiveness application. And it actually provides an example of how to use the FTE reduction exemption due to operating restrictions. That's that safe harbor number 1 that I was just talking about. So we are waiting on these FAQs. And what do we not know? We know a lot more than we did in the past. What we don't know is who an owner employee is, what percentage of the company you have to own, and that kind of thing. We still don't know exactly what's included in utilities. We don't know how companies who want to shorten their 24-week period to say 9, 10, 11, however many weeks, can do it if the banks aren't accepting forgiveness applications until mid-July. And so, I mean, that's really it. That's all we don't know. And so we're waiting for the FAQs. And of course, I'll do another webinar once those come out. AICPA has released 2 calculators, the main one that we all know and love, and they've just released one that's for self-employed and no employees as well, which is just spectacular because there are a lot of fields on that main one that don't apply to self-employed people, but they would get confused going through it. And so now if you're self-employed, no employees, use the new AICPA spreadsheet that's built especially for you guys. Okay, so I want to launch into a screen share to show you how this new updated application works. There we go. So this is for a partnership that has some hourly employees. Can everybody see me? Great, fantastic. So this is for a partnership that that has a couple of employees. And so their disbursement date, when you enter that here, it's going to, you're going to put in the disbursement date and also the length of the covered period. And so all of the other stuff is going to calculate based on those dates. You'll see that in the non-payroll costs tracker, even if you select an 8-week period, it'll give you 24 lines, 24 weeks of lines. That was just because they haven't cleaned it up yet. You can just use the first 8 weeks and that's fine. They just didn't want cleaning little things up like that to delay them being able to put this out. So you put in the length of your covered period and it's going to calculate these dates here for you. And then you put in your PPP loan amount. Okay, this is all in the PPP Forgiveness Calculator, the main tab. And then these green ones, just as before, you enter data in the blue ones, and then the green ones are the ones that will calculate based on other worksheets, and the gray ones are calculated based on the totals from the green ones, the green and the blue combined. So I didn't enter any information here on this one except for the beginning date, the disbursement date. I entered the number of weeks and I entered the PPP loan amount. I didn't enter any of the rest of this. This all happened when I filled out the rest of it. The only other thing you would need to enter here is if you received an economic injury disaster loan, an EIDL loan advance, you would need to enter that here because they are subtracting that from your forgiveness, which is really unfortunate and completely inconsistent with the CARES Act, but unfortunately, they didn't ask me. So the next thing you would do is you would go to your non-payroll costs tracker, which is right here, and you'll type in for each week, you know, it's gonna pop up with these dates, and you're just gonna type in your rent amounts, your gas, electricity, your phone, internet, all of those types of things, okay? It's gonna add it all up, and it's going to dump it into this forgiveness calculator main sheet that we were just looking at. It's gonna dump it right into your mortgage interest, rent, or utility payments. That's where it's pulling that from. Okay, so that's in your non-payroll costs tracker. It's pulling stuff from there. Next, you're going to, if you do not qualify for the Safe Harbor number 1 for FTEs, so again, it should be a very small percentage of people, then the next thing you would want to do is go to this FTE input tab. I'm not going to go through that right now because A, we're talking about a small percentage of people, and B, I was really thorough about filling this tab out on my other webinars. So if you need help with this, shoot me a note if you're really having difficulties, and maybe I'll record another webinar that's just for this sheet. But really, this is only going to be for people who do not qualify for Safe Harbor number 1. Okay, this is the sheet where you would come in and you would fill out the regular FTE rule, which compares it to the lower number of FTEs from either February 15th to June 30th, 2019, or January 1st through February 29th, 2020. You take the lower of those, you compare it to what it was over your forgiveness period, and as long as you've hit 100% of the lower of those 2 periods, you'll meet that original rule. And then lower down on this sheet, there's a section for if you don't meet that, but you might meet Safe Harbor number 2, which now of course is going to be either December 31st or the date that you're submitting the application, right? Then you would put in your February 15th FTEs. You'd look at your FTEs from February 15th through April 26th. If they went down, then you qualify for the Safe Harbor number 2. And then you would calculate at the date of your either December 31st or the date of your forgiveness application what your FTEs are on that date. And hint, if you don't qualify for Safe Harbor number 1 and you don't meet the regular rule for FTEs, then don't turn in your forgiveness application to get Safe Harbor number 2 until you meet the number of FTEs that you had on February 15th. That's the way to make that work, okay? So then the next thing you would do is you would come over to the payroll accumulator, all right? Payroll accumulator, you're gonna do a lot of work in this particular area because now the FTEs aren't the biggest of our problems. And something that I'm seeing a lot of is people will jump in and they'll enter all of their employees on here for this first quarter. Don't do that. The instructions say, fill out the covered period first. That's this little section over here. Fill out this covered period first. You only need to enter employees on the payroll accumulator that actually got paid during your forgiveness period. All right, so enter those in, fill out the gross wages that they're paid over that period, the average number of hours worked during the week during the covered period, and the number of weeks paid. In this case, it was just, we were calculating this over the period of 8 weeks. Okay, because the person who was doing this was originally planning on getting their forgiveness over 8 weeks. And then come back in and fill out their quarter 1 information over here. And what this is going to do is it is going to look at the average annual salary or average hourly wage from the first quarter. It's going to compare it to what you paid them over the covered period. They're going to determine if it was reduced more than 25%. If it was, then you have the opportunity to fill out Safe Harbor information. And if not, then there's no reduction. So this person paid them the same amount per hour, same amount or more per hour in their case, but you just need to make sure you don't dip below 75% of what they made before. So there's no reduction for that person. This table too is just for people who make over 100,000, because you don't have to worry about salary or wage reduction for them. Maybe they were making 120,000 before and they're making 5,000 now. Doesn't matter. We don't care about them. Tough love. Should have saved up. Should have put it in a savings account. And then lastly on this, there's this compensation paid to owners, okay, where you're going to put in what they actually were paid during that period versus what their prorated amount for 2019 would have been. For the 8-week period, if you elect 8 weeks, that's only going to be for 8 out of 52 weeks of 2019. But if you elect the 24-week period, which I recommend everybody do, then you're going to get 2.5 months of 2019. It's going to take whichever is lower and it's going to add that. Then next you go to the Schedule A worksheet. If you were doing FTEs and you had some exemptions that are not Safe Harbor number 1, then those would go here. So that would be if somebody voluntarily left or they were fired for cause that has nothing to do with COVID, or you weren't able to replace someone. That's the only thing you do on this Schedule A worksheet. Then on Schedule A, you come in and you're going to put in employer contributions for employee health insurance, employee retirement plans, and your state unemployment. That's the only thing you're going to do on Schedule A, right? So this is a lot simpler than it was before because we don't have to spend hours and hours on that FTE stuff. So it's going to pull all of that in here, and this person, as it turns out, they had no wage reduction, which we saw from the payroll accumulator. They claimed Safe Harbor number 1, which is now on Schedule A. Sorry, I didn't show you that part on Schedule A. You get to pick Safe Harbor number 1, or you get to say that there's no reduction in employees or average paid hours. If you got both, great. You only need to check one. And that is what gave this particular person 100% on their FTE reduction because they met Safe Harbor number 1. That's all there is to it. They got full forgiveness. So we filled this out for this particular client. We filled that out based on 8 weeks and saw that they still had $1,107 that they were going to have to hurry up and spend by today. Today was the end of their period, right? And so we're like, oh no, we have to spend $1,100 in 2 days. We have to run an off-cycle payroll. And then I said, wait a minute. What happens if we look at the bump up that you're going to get in owner compensation if you elect the 24-week period? The $1,100 went away because they had paid it out. They just were limited by how much of it they could take. And that was what told them they want to claim the 24-week period and Safe Harbor number 1. So I still think that that AICPA forgiveness calculator is an amazing tool for planning and forecasting. You don't have to worry about it too much if you've got Safe Harbor number 1, but for folks who don't hit that Safe Harbor number 1, you really do still want to be going through the complicated version of that spreadsheet. Again, if you're Schedule C sole proprietor, you don't need to worry about it. You can just use the simplified version because you're automatically going to get all that forgiven. It's only for folks that aren't going to meet that Safe Harbor number 1 or have some other reason that they might be thinking they want to hit that 8-week original forgiveness period. You can run through the numbers and determine whether they want to do 8 weeks or 24 weeks. I haven't yet found an example where 24 weeks would make sense, except there was one for a not-for-profit where it made sense because they didn't get any bump up in owner compensation because there are no owners of a not-for-profit. So in their particular situation, it made more sense. We've got 3.5 minutes left, and I see that some questions have come in on the group chat, so I'm going to take a look there. Does the application get sent to our lender or the SBA? It gets sent, so your lender is going to give you their version of the forgiveness application. They are allowed, SBA just made that clear, lenders are allowed to create their own version of the application, and it is not available now. At the earliest, banks are going to have those available. The forgiveness applications from SBA are available now, but banks aren't accepting them yet, right? And the banks are going to reach out to you, presumably, and it won't be until at least mid-July, the AICPA said. I did notice that the links for the SBA forgiveness applications aren't working. They are down. I noticed that a few hours ago as well. Don't worry, they'll be back up eventually. Somebody says that their bank does not have the forgiveness application ready. How will that affect my controlling the date of the application for the FTE Safe Harbor? That's one of the big questions we don't know the answer for yet, but they have said that they're going to interpret that liberally. And so hopefully that means that if we're ready today, but our bank's not ready, we can still use today. There is some possibility that they're going to say, no, you can't use your end date until we make the forgiveness application ready. But I would be very, very surprised by that, because it does make it really clear in the IFR that the intention is for them to interpret the FTE rules liberally, especially that Safe Harbor number 1. How does EIDL factor in? It's listed high on the form, but not in the application area. I'm not exactly sure what that makes. Not sure that I understand that question entirely. I'll try to come back to that one. But how the EIDL factors in, the EIDL itself doesn't factor in at all. Only the EIDL advance grant, that will have to be subtracted from your forgiveness for the PPP, just that advance grant. And there's that blue area on the main page of the forgiveness spreadsheet calculator where you type that in. Somebody says, I noticed there's no accounting for pay rate reduction on that application. That's because all you're doing by filing the EZ application, you are certifying that you didn't go under 75% for any of your folks. And if you did, well, then you're going to have to use the regular application. All right, so there's no section on there for that. So how do we know which version of the loan forgiveness application to use? I want to use the EZ. I want to use the EZ too. Yeah, so I think that since that question was asked, we already answered that one. You've got that list of what it takes to use the EZ application. We only have a few minutes left. I know I didn't get to all the questions, but certainly shoot me an email and ask them to me. I'll try to answer the rest of them in a blog post. Thank you all so much for coming, and congratulations on the new rules. Yay! Be safe, everyone. Bye.
Bye.